Hey guys, so today is going to be day one of us trading the S&P Mini Futures. There are other markets we're going to focus on, of course. There's going to be the Dow, NASDAQ, Russell, some individual stocks. But, you know, just to keep it simple, we're going to use one of the most liquid and oldest future contracts in history. One of the most successful, the S&P 500. We're going to do the minis. And today will be the first day of trading. So right now you see right over here, right over there, right? There was this top at around 33.12, 33.10, 33.12 right here. Okay. And basically at that top gave a nice short signal. It went down to 32.90, which was a nice move. Okay, and now we see on the 5-minute chart, we see basically that the market bottomed around 32.90 or so, a little lower, and it's trying to break out at 32.97.5. It might be a nice long. That was a great short over there, and this might be a nice long here, but for now we're still going to watch the market. It's not just about entering trades, it's about finding the right opportunities, and let's see where it goes. Okay, get back to you soon. Here, going live. Okay, so right now it's 10:31 p.m. It's Wednesday, September 23rd, and we're starting our trading account with $150,000. Okay. And what we're going to do is we're going to trade the S&P minis future contracts on paper. This is not a live account in terms of this isn't a real account of anybody's. It's just a paper account for informational and educational purposes only. And be aware that there are high levels of risk in any kinds of investments, and especially leveraged instruments like the S&P 500. And you should always consult an investment advisor and your accountant before engaging in any investing activity, especially higher risk ones. So today we're starting with 150,000. Let's look at the market right now. Okay, this is the S&P. It's right now at 32.97.50. The high of the day was 33.19 3/4. The low was 32.89 1/4. And we look at a few different charts. We have some proprietary moving averages. You see the different colors: the yellow, the blue, the white, the red, the pink. So we have those different moving averages, and based on their formation and based on where the market goes, we get into trades. So this is where we're going. This is where we're starting. And right now the market had a big sell-off from 33.10 till about 32.90. And now it's bouncing back, trying to head towards 3,300. And we're going to see what we're going to do here, whether we're going to go long or short. We're not necessarily just jumping on a trade. We're getting into trades that we think we can do well with and have a nice, risk-reward ratio for the entry. Today is day one, and we're going to get started today with the $150,000 account. We're going to treat it as a real account, even though it's on paper. We're going to, notate any losses or gains, and we're going to trade it for a little while. We'll see how it goes, and this way you guys can see live trading in action and how a trader that has been on Wall Street for years and years and was a broker in the past and is going to be developing a hedge fund, how he trades. All right, great. Talk to you guys soon. Now, the S&P, as you see, it made an attempt to rally back from the lows. It hit about 32.95, and now it's heading back down. So we're going to go short right here, and we're going to short 5 contracts. Let's do that, okay? Okay, let's go short 1, 2, 3, 4, 5 contracts, okay, on the S&P. There we go. Okay, and we've been filled at 32.88.5. Okay, so we've been filled, and we're gonna go back to our chart. Okay, and now we're gonna put in a stop at 32.96.5. Okay, so we have our position here, and now we're putting in a stop at 32.96.5. Okay, always very important to have a physical stop in place, because you never know how much the position can go against you, and risk management is the first thing to trade as a business. And even if you're investing on the side, longer term, you do want to make sure you don't lose more than you should. Okay, we're in the trade now. Let's see what happens. Getting back to you soon. Okay, so here's the update on our trade. Before I get started, I just put a daily chart. It's very important to look at different time intervals whenever you're entering a trade, because you need to know where the market's going. You see the market around July time had a huge rally, all the way from 3,000 to about 3,587 at the top. And you see the lines, it basically gave that long signal at around 3,100 and just went straight up. Now, the market looks like it's testing support. You see all those white lines that it's kind of like broke under the support, then came back. And now it looks like it may be heading back to 3,000 over, time, unless it can break back up again above 3,300. So that's the perspective we have of the, the medium term to longer term trend. So the market does look like it's a down market, so you want to go and looking for shorts when you are trading. That would be the perspective. Now, in addition to the daily chart, I look at the 30-minute chart, which has a lot of perspective and can take you out of a lot of noise. The 30-minute chart shows that the market basically hit a low of 32.17 Monday night, whatever, and then it rallied from there to 33.20. And now it looks like it gave a short signal at around 3,300, and it's kind of bouncing off of the lows that it just hit about an hour and a half ago. We are short, but that's why we are short, because it looks like a short signal here, and we do want to look to go short here as well on the 30-minute chart. The next one and the final chart you want to look at is the 5-minute chart, especially for day trading. Very important chart. The 30-minute is much more important in terms of seeing the trend, but if you want to enter trades, you want to set stops, you want to see what's happening in the very short term to trade intraday. I don't believe in like going in and out 1,000 times. I believe in looking for the bigger moves of the day, and essentially, even if I'm day trading, I'm looking at myself more of as an investor, looking for the bigger moves of the day. I obviously take on more risk than if I would be going in and out 100,000 times, but I just don't believe in that philosophy, and I could discuss that another time. But my point is here, look at the 5-minute chart. So that's the perspective. Look at the 3 charts. It's daily chart, where each of the candlesticks is a day. 30-minute chart, where each of the candlesticks is 30 minutes, and then the 5-minute chart. So those are the 3 you want to look at whenever you're trading whatever product or stock or a market you're trading. So we are trading the S&P minis as we discussed. So right now we entered short. The position did initially hit profitability. I think we still are profitable. I'm going to check in a moment. But it bounced off of the lows, and it's kind of testing the average. So let's see what happens here. Since our daily chart and our 30-minute chart are still showing shorts, right? Let's go look at them again. They're still showing shorts. So therefore, we too are looking for a short as well. And we're still staying in the position. But we are kind of, we do have our stop at 32.96.5, right? So we still have our risk, at that level. But we're still gonna stay long. I'm sorry, we're still gonna stay short in this trade and follow the market. So let's see where we're doing in terms of profitability. Okay, so we're up 875. We were up over 3,000 in the trade. We did not get out, like I said, because we're not looking to get out every time we hit, some profit or whatever. We want to work with the system. We want to work with maximizing our gains and minimizing our losses and looking for the bigger trend. So the market has had a big bounce. It could continue going higher. We'll see. But trend seems to be lower. So let's wait. So we're going to stay in this trade. We're going to keep our stop as it is. And here, just so you see again, our orders. Yep, so we have the 32.96.5 stop. Okay, we'll catch up soon.